Listen-only mode.
Good morning, everyone. Can everyone see my screen and can everyone hear me okay? Just type yes or no. Okay, then we're good to go. Now, today we're going to be talking about if you sold a Forex binary option, now you have to manage it, okay? Now, before we get started, I do want everyone to take just a moment to read over the disclaimer. This is for your protection as well as ours. And basically, anytime you are trading, you are risking money, okay? Even with binary options, you have limited risk, but there is still risk there. So if you would just take a moment to actually read over the disclaimer, and then we'll get started on the presentation. Now, my name is Gail Mercer, and I'm going to be your hostess for today. I have 15 years of trading experience. That's when I stopped counting. And I started out with a company that programmed indicators, and I just fell in love with the price bar. I thought that was the coolest thing I had ever saw. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities magazine, Traders World, and Top Shelf. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of 2 binary option books. One is The New Trader's Guide to Trading Nadex Binary Options and Spread, and Trading Nadex Binary Options, Keeping It Simple Strategies. Both of these books can be found on my website as well as Amazon.com. Now, the first thing I want to go over is the difference between buying and selling binary options. When you are buying a binary option, you expect price to go up. So you buy a low premium and you sell at a higher premium. When you sell a binary option, you're expecting price to go down. You sell a high premium and you buy it back at a lower premium. For example, this is the sheet for the euro US dollar, okay? And you can see all of the strike prices are along the left-hand side of the screen. You can actually see how much time is left in the binary option. And if you want to sell, you would click on the bid. If you wanted to buy, you would click on the offer, okay? Now, when you are selling, and this is quite confusing for some new traders, your premium goes down from 100. In other words, on the buy side, it starts at 0 and it goes up. On the sell side, it's the opposite. It starts at 100 and goes down. So you always have to calculate your risk when you're looking at these premiums. For example, this is $11. 100 minus 89 equals 11. This one is 52. In other words, what you are seeing actually on the screen, this $48 is profit potential that is remaining. The $89 is profit potential that is remaining. To actually get the risk, you need to subtract that number from 100. Does everyone understand that? It's very simple, but if you don't get it right, then you don't really make money on binaries. Not when selling, okay? You have to know how is the risk being calculated. And this is a great example. This is the USD Swiss franc, and it's for an 11 a.m. expiration, and this was on Monday, I believe. So if you believed that the USD Swiss franc would be less than 99.40 by 11 a.m. on Monday, then your risk was $11.75. It shows you that right at the bottom of the ticket. Max loss $11.75, and your max profit is $88.25. Now, if you notice, these are equal, okay? This is equal to your max profit, okay? And that clearly shows it is subtracting from 100, okay? So in this case, if you were able to capture the total profit of $18.25, that gives you a really good risk to reward ratio. Now, I always set a profit target. I don't have to have the whole kit and caboodle. If I can just get a portion of that, I'm happy. In this case, I would be setting a profit target at 15. If it did move down, and if my profit target is filled, that would give me a profit of $73.25. Or for every dollar of risk, I've managed to capture $6.23 as a reward. Does everybody understand that concept? And to actually calculate this, all you have to do is divide the profit that you make by your risk, and it gives you your risk to reward ratio. Oop, it's 11.75. Sorry about that. Does everybody understand that? Any questions? All right. Now, when you're trading, whether you're going short or whether you're going long, there's a constant give and take, okay? How much time is remaining in the binary? You know, what is the current price? What do you expect the future price to be? Is price doing what you anticipate? Is there sufficient time remaining for price to get to where you want it to go? Sometimes there's too much time, okay? And this is one of the examples, okay? In this case, you entered the binary right here for the strike at 28.76, okay? Now this expires at 1 p.m., okay? It's got 30 minutes left because this is a 15-minute chart. This is your 12 o'clock bar, 12:15, 12:30. So this has 30 minutes left in the binary option. What is the problem? Okay, the problem is you're having a reversal bar form, okay? And that reversal bar tells you that price is going to go up. If you are short, you don't want price to go up, do you? That's when I would just go ahead and exit the binary option. Price is telling you it is going to go against you on the next bar, okay? There's only, and let me delete these drawings on here. You can see right here, if this is your strike, there's only $10 of profit remaining, okay? Because remember, you're short, you have to buy to exit the trade. Does everybody understand that? And that means there's only $10 left, but there's 30 minutes and a reversal bar, okay? I would not sit with that trade. I would be out of that trade. Does everybody understand that? And reversal bars are really good indications of when you should go ahead and just scratch the trade. But again, it's how much time is remaining versus where price is currently at. Because let's say that it was down here at 28.56, okay? I may go ahead and stay with it and let it expire. Does everybody understand that? So there's a constant give and take when you're trading, and you're always measuring, okay, where is price at currently and where may it be in the future? In this case, with the reversal bar, it very well may come up here back to my strike, which is not what I want, because it's going to take away from my profits. I can lock in all but $10, okay? So I'm going to lock it in. You know, an old saying in trading is it's not profit until you have it in the bank. Well, the same thing applies to binaries. You know, you may be green, okay, but if you don't lock that green in, meaning exit the trade, it's not really profit, okay? Does everybody understand that? So basically what you're doing is price doing what you anticipate that it should be doing, okay? For example, let's say that you have divergence, okay? I'm a big divergence trader, and the divergence tells me that price is going to go down, but it's going up, okay? Does that make sense? No, I would exit my trade. Reading price bars, you know, pivot bars, and I'll show you. I did a presentation a couple of months ago on pivot bars, okay? So, you know, if I have a reversal bar or a pivot bar that's going to go against my trade, I'm going to exit early. How much time is left? You know, I have a lot of trades that I'm predominantly a 2-hour binary option trader. And when I enter a trade, typically I have my profit target within about half an hour. Not all the time, but a lot of the time, okay? Now, if I'm getting most of the premium collected within, let's say, a 30-minute period, I don't see a reason to stay in this trade for another hour and a half, because not only am I exposing myself to a loss, but I'm also exposing the profits that I could lock in, okay? And this is where I'm constantly saying, okay, if I stay in this trade, how much would I make per minute if I stayed in it for another hour and a half? Well, there's only $15 left. I'm not staying in this trade. Does everybody understand that? Is it really worth the wait is what I'm getting at. Now, sometimes I'm not sitting there, or I did not put in a profit target. A great example was a trade on the USD Swiss franc that I did yesterday. I went short thinking it would go down, and I think it was actually at the 98.40 strike price, but it was for 11 p.m. The USD Swiss franc is a very slow moving currency, okay? I only paid $17.25 in risk per contract, okay? And at expiration, it expired less than 98.40. The reason that I did not try to manage that trade or even put in a profit target was because the risk on it was so low. Now, the higher your risk is, the more I think you need to manage your trade. You know, a lot of people will trade the in the money, which means your risk is generally, you know, at least $70, possibly more. To me, you're going to have to manage that trade more than the trade that I did last night on the USD Swiss franc. My trade had $17 of risk versus 75. Now, what's the difference? The difference is when I'm risking, you know, $15, $20, $25, $30, I'm expecting a higher number of losses. But I've compensated for that higher number of losses by making more on the reward side. Does everybody understand that? Going in, for example, in the money, you have a higher risk. You have to be right a lot more than what I have to be right. Do you understand that? And that means that I need to be able to close the trade a lot quicker when I'm risking a lot of money versus when I'm risking, $20. And at the money, again, if you're in at the money, which is about $50 of risk, then you need to be able to manage that trade. And again, if it goes one strike against me, I'm usually out. My preferred method is out of the money. Generally, I'm not risking more than $35. Okay. That ensures I can increase the reward side versus the risk side. Okay. Now, you can visit my website at tradershelpdesk.com. I have a blog that you can click on. I write a lot of posts on trades, on managing profits, as well as risk. You can also email me at gm@tradershelpdesk.com. Does everybody understand what pivot bars are and how to read price bars? If you go to the Nadex.com website, if you go to the Learning Center and go to Webinar Archive, if you filter by presenter, they have videos of all of the presentations I have done. So what you can do, for example, let's say that you're new to trading binary options. Where do you start? You can watch the webinar just by clicking on the link to watch the webinar. But there's also one here on trading price bars. It's pivoting into trading opportunities with binary options. It goes over the pivot bars, and you can actually read the price bars and know, okay, the next bar is going to be up. The next price bar is going to be down. It's really a neat way to see the markets. Okay, I'm new to Nadex. Would appreciate a repeat of how you interpret the risk loss info on the charts. Okay, let's go back to that one. Okay, this is one on the British pound, US dollar, Marie. So if you're going to go long, okay, then you are looking at the blue price. And this blue price means that you would buy. Okay, if you click it, you're going to be buying. And this is telling you the risk. So in other words, if I wanted to buy on this particular day, if I wanted to buy the British pound dollar for 1 p.m. expiration, the strike is 1.2876. My risk would be $10. And if price expired above that strike, then my profit would be $90. Okay? Because the maximum payout on any binary option is $100. Okay? But let's say that I think it's going to go down from here, and this is an out of the money, okay? And this is to sell, okay? In other words, I believe it's going to go down. In this case, this is showing me the actual profit potential if price is equal to or less than the strike price, okay? And it's 28.56. Now, the risk is calculated by subtracting that number from 100, okay? So in this case, you've got a risk of $8.50. Do you understand now, Marie? Okay, any other questions today, guys? I'm not going to be looking at charts today, but if you have any other questions, I'll be glad to answer them for you. Okay, if we don't have any other questions, then I'm going to end the presentation today. I hope you all enjoyed it, and I look forward to seeing you in June.